Good morning, everyone. All right, so last week, a little nasty, that was for sure. So, transports, I always look around at different markets to see did one underperform, maybe outperform? Clearly, the transports did not outperform. They underperformed on the way up, and they're outperforming on the way down. So, we suspect these things are going to go lower. I think it would take a miracle to get them turned around after such a drop. Big unemployment surprise. So uptrends have been violated on most of the daily time frames. But now we look to the left. Where are they likely to stabilize? And this congestion area down here in the transports, it's likely that this will continue to lead the way down and hit this area first. Um, since it's so close to that area, and it's a relatively large area. So while I've marked it off here, maybe it goes down a bit lower, give or take. These is where the pivots are, but set alerts in these areas. You don't have to watch them, during the trading day, unless you're trading transportation stocks and you want to do that, to be aware of that. But when they come down there, the first step would be to look at, as we talk about a particular sector, stocks within that sector. So transport alert goes off. You go look at the transportation stocks and say, hey, which ones might have green bars, right? Showing relative strength, at least on a 1 bar measurement. Are there those that are making higher lows? In other words, find ones that are showing some relative strength. Maybe they're on support already. And you start with credit spreads, right? They came down real hard, like this comes down real hard. You could look at one of the ETFs to see if there's premium there for credit spreads. So that's the starting point. We're not looking for directional trades until they stabilize down there for a while. No, I can't see where this might be gapping up to, or if it is, but others, we know the other markets are gapping up a bit. Nothing of great significance. So we'll look at other markets as we always do. And there's lots of unfilled gaps up above. I'll get to the Qs. There's an unfilled gap down here. There's an unfilled gap down here. I suspect this could go unfilled for, well, probably maybe a long time. It doesn't have to get filled. We'll just have to see how far this correction goes. A downside target, obvious one, is the 50 MA. It's in alignment with some support. Moving averages are not always aligned with support. This one is. And as you can see, if you look at the weekly chart, you look at where the cursor is, right? That little area down there, give or take on either side of the 50, is where there's minor support on the weekly time frame. So that would be the areas that I would suspect. And again, assuming that they're going to continue to go down, which I do, there's no reason to think otherwise, right? This morning's gap up doesn't change anything. That down in those areas are where buyers should begin to show up more aggressively. Right? Okay. IWM. Let's spread this out a little bit, a little clearer to look at. That gap down significantly and closed below the 50 and the 200 and the pivot low. So we always look at the Russell as how aggressive other traders and institutions are, because these are more speculative stocks. And if they're going up and the other markets are going up, I often refer to that as they're firing on all cylinders and everybody's happy. And now nobody's happy, right? Unless you're short. And so there's an unfilled gap. I think just based on how some of these things came down so aggressively, I would be surprised if this gap gets filled. You can see it's gapping above Friday's bar. And it's come off a little bit. So we'll see what it does. I mean, I think it will probably rattle around in here maybe until tomorrow when we get some other economic reports. Um, you know, the market gets something more to go on other than just being extended to the downside in the short term. But look at the size of these weekly bars, these weekly reversal bars. So we look at wide range bars as igniting or ending. Right? So as prices start a move and you get a wide range bar, it's igniting. And so we looked at then, was it igniting from a V top? Did it ignite and break down below a base? So there is some congestion there. So it's kind of bearish, right? Whereas something like this would look at as potentially a wide range bar ending. And then, of course, you need confirmation. So our confirmation now is going to be, well, is have an inability to rally up, an inability to fill the gap. Does it stay down in this area and then roll back over again? So we'll have to see what happens there. Looking at the Qs. We looked at NDX, so now at the Qs. So what I did here was I put a line with a measurement, a percentage measurement, to say where, percentage-wise, where would that line up? Because most times in a bull market advance, the markets will decline 3 to 5%. It's a generalization. Then you look and see, does that line up with any support? Does it line up with a major moving average that institutions will be looking at? And the 50 MA certainly is on the daily time frame. So the 50 MA, give or take, is at around 5%. We look over to the left on the daily chart, we don't see anything, but on the weekly chart, we see that minor support area. So that would be a downside target. And unfilled gap, ideally, theoretically, if this is all staying bearish, it will not get filled. It's going to gap up here. You can see where it is. It's gapping up to the top of Friday's bar, right? Which is not a big deal. And if you look at the 15-minute chart, the bottom middle, it's right at those pivots. Now, it does have room to go higher because of this unfilled gap, the void. But gapping up there, there's going to be sellers there. Let's see what the reaction is. So far, the reaction is bullish. It's going sideways at resistance. We'll see what happens at the open. All right. Let's look at spiders here. And it's the same thing. There's an unfilled gap down here at the 50, just below it is almost 5%. It held the major support, the pivot low prior to a higher high. It's gapping up to the top of Friday's bar. Minor support is where this dotted blue line is. Downside target. I think, right, for now, just because how bullish the market has been, ignoring the jolt that it had on Friday, I don't think the gap gets filled. But that would be, quite a bit more, obviously. But, coming down there would be, well, not terrible, about 6%. Let's, step by step, let's see what happens when it gets to the 50. We looked at transports, we look at that, and yeah, we checked this out on Friday, the big drop in the 13-week. So when Thursday's jobless claims come out, there's data tomorrow, but one thing you should have somewhat of a concern on, especially if you're going to be short, it would make sense to look for shorts after a drop like this, is the Fed coming out and lowering interest rates in the middle of the trading day rather than waiting until next month. Now, I'm not saying they're going to do that. Nobody knows. But I have experienced that many years ago. And I was short. And you better have your stops in because, or stop and reverse, because it was a violent reaction to the upside when they did it. So this is the market saying to the Fed chair and the rest of them, you're going to cut because this is what our belief is. And they're going to, they've already done it. So they're saying they're going to have to cut interest rates now. And there's the 10-year, right? Breaking down, we've been saying it, I don't know, enough times, big trading range, little trading range. So we're saying in the middle of the trading range, and now it's at the bottom. of the larger trading range, give or take, and looks like, it's continuing to go down. And that implies recession. The market's belief that this market is schizophrenic and it can change on a dime with new information or another Trump tweet or wherever he posts or says it in the news. But right now, this very sharp drop is pointing toward a belief that a recession is very possible. Alex is sharing. Moody's chief economist warns U.S. economy on the precipice of recession as tariffs, labor shortages trigger market sell-off. Yeah, I don't think this is out of Trump's hands now, Robert. He did what he thought was necessary. I think in a lot of ways, I think we'd have to agree that what he was, I don't know about the way he did it. That's yet to be seen, whether it was the best way to do it. But America paying higher tariffs and not collecting money and the way they've been taken advantage of by Democrats and Republicans was wrong over all these years. So, now, the payment is, here. We'll see. Now, like I said, how are they going to avoid this? Cut interest rates more aggressively. And we'll see what the reaction is to that. And so the expectation is, okay, they're going to cut a quarter. Well, what if they cut a half? So, you got to keep that in the back of your mind. The market could, rip higher pretty quickly if that was to happen. All right. Bitcoin also took a little bit of a hit. It's holding on this minus support level, but now we've got this rounding top, as you can see. It looked great. There was initial rejection there, the topping tail, not a big deal after an advance like that. And then it formed a pivot high, still not a big deal. It was going sideways. Maybe it's going to turn up. And now it went down on news, but holding this minus support. But so now, does it continue to go down? Does it recover? That's the unknown. So you stand aside. You don't, if you get a 1, 2, 3, or look at, the stocks that trade with this and see what they look like. Is there an opportunity? So just like as markets bottom initially, you look for put spreads. As markets initially top, you look for put spreads, call spreads, I should say, because it's unlikely that they're going to get back up above here. And so as they come down and they form patterns like this, where you get a pivot low and then you gap reversal, we look for put spreads. And it's, once you understand the basics and the mechanics of this, it's common sense. Then it's like, can you trade that efficiently, picking the right strike, time to expiration, and most importantly, management for that animal, because the reward to risk is what it is. But so you have to be aggressive with the management, otherwise you're going to get hurt. All right, I'll take a quick peek at the futures. I got to get to SPX. All right, so moving averages are not as important as they are with the underlying, but YM is sitting on the 20 and the 50. You can see they're stabilizing here this morning, not a big deal. And stabilizing on support after a sharp 2-day drop is not unusual, but it's right at resistance. And S&Ps, same story, right, on support, up at resistance, no big deal. This came down real hard. Okay. On support, same story. Right. Gold, just been in a big trading range for a while. So on that news, interest rates dropped, expectations for the Fed funds rate to get caught, the dollar dropped, and the dollar's in a bottoming process. Maybe that bottom's going to fail. I don't know. Could be in a topping process. Right? That's the unknown. So you either trade the extremes of the range, or you stay the hell out of the way. Right? So there'll be sellers up here, and does it get tight or does it stay loose? And I always refer and go read on the blog tight versus loose. But this is a loose, whippy trading range. Oh, we don't know what it's going to do. Silver, violated the trend. Looks like it could bounce a little bit. Oil, I got to clean up my little drawings there. Yeah, which way is it going to go? Coming down kind of hard, so loose. I thought maybe it would tighten up here and go higher, and that's not happening. And that was one of the things I was looking at and thinking, well, if that holds up here, interest rates falling down, the whole idea of a recession being implied by what I explained, this should start coming down. And now it is, right? Because there should be less demand for energy if the recession is going to happen, and this should break down. So, this intermarket analysis part is important as to reading the tea leaves from the broader market perspective. All right, so let's get to SPX. It is gapping to the top of the bar. This was last Friday's numbers. Didn't get close. We know the prior day did get touched. It happens now and then. We start with what is an extreme 61.85. Not coming up very much, so it's up a little bit, not a big deal. Let's say, are there any signals to market if LQD was to break out of the weekly? I'll take a look at that. That's an ETF, I think, the short-term interest rates, if I remember correctly. So gapping up here, closer to the top, further from there, is not going down there today, not without any news. And I don't think the gap gets filled, and the 20 MA is in the way. All right, we'll look at LQD, and then I'll hand it over to to Dan. LQD. So this moving up here, right? Corporate bonds, interest rates go down, this goes up. It's the same thing. You're looking at the opposite of what we were looking at interest rates. If this goes up, interest rates go down, and sometimes money goes into bonds because of just money going out of equities. Where you're going to put the money. So breaking out of here clearly would be bullish for bonds, bearish for the economy, right? And so on. So there you have it. All yours, Dan.
Good morning. It sure was tough finding quality patterns this weekend. As Greg said, and we actually started looking for shorts and call spreads on Thursday. But Thursday was a tad early for directionals. And then Friday, I had a gap and go bearish day. So now we're looking for bounces. But the problem with call spreads is this, like our checklist has kind of three things. Or four. You need a pattern. Okay, it's call spread galore. Go to the option table. Are they liquid? I'm looking for vetoes. Is it sufficient premium? And finally, for the perceived risk and days to expiration. And finally, for our weekly options trader, we just kind of made it up. It's only 10 days or less. Now, so Greg, at times I've thought about changing that to 12 days and less. And the reason for that is because when I'm looking for things on the weekend, if you go 2 weeks out, Monday, a week in a week is actually 12 days. And I've done that before, and I've just highlighted it. Hey, this one's a little longer, but that's the approach. So we are looking for call spreads on bounces here. We'll get price improvement. We have incredibly low inventory here. Like we only got one open trade. In the weekly, the advisory letter, we only have 2 open trades. That's just historically low for us. So we bought a half lot of this laser, added on the 1, 2, 3, and we're in trail mode on this RHI short, and it's opening up flat. So what does that tell you? What concept of this chart in today's open of MT live concepts just screams at you? The answer is relative weakness. I mean, this thing's in a downtrend under all moving averages, didn't bounce last week, and now the market's up huge pre-market, and this thing's opening flat. So this has just been a very easy to manage trade. We have our share of tough ones, so to get easy ones like that is so nice. I had an IPB alarm go off. We're long a half lot of this in the ETF letter, but this is actually, it's a sloppy buy setup, sloppy 1, 2, 3 on the weekly, but relative strength. So that's okay. So it was an up alarm. So let me just reset it higher, 135. Let's now go a couple earnings here, and I weeded out some already. But yeah, it's going to be tough here, and we have very, very few new ideas. I'll go through them here in a moment. So this is earnings, FRPT. This would have been a pattern that I said if it opened flat, short Friday's low. But look, now it could be an igniting gap. This could be a 30-minute high trade. I'm gonna put that in this window because that's a shock gap. Gapping over the high of Thursday and Friday. ENR 26. So it's a bullish gap, but it's too big. It's a monster percent. $4 divided by 22. All right, so this is also a good example of conflicting time frames, because this was a sell setup, but now it's going to be a red bar ignored sell setup, and the monthly is actually a climb up. So it looks higher, but you just got to work an entry. Overlapping bars, piece of garbage. I don't see where it's opening, but if it opens flat, I'd say you can short last week's low. Broker gapping down 34.50. Maybe a day trade gap and snap based on how it sets up. But I have no interest in the swing. Twist, I think so. Bio, $31 looks lower, but yeah, that's a bio. W whiskey has been on a tear. I remember when this thing, wasn't it like $300? Yeah, look at this. I remember this over 300. Look how good my memory is. And during COVID, this turned out to be a COVID stock of people sitting at home buying furniture, or no, furniture's restoration warehouse. But I know I'm looking at these are all earnings, Patrick. No, I'm mixing it up. Wayfair used, buy carpets and junk for your house, and restoration warehouse. That was also a COVID trade. Remember that? Look at that, $700. Crazy. Waters, pattern, potential sloppy W. I don't see where it's opening though, but let's say a bull sandwich on the weekly. It looks like a mess. I'm going to be so picky on new trades here, particularly swings. Zep, amazing strength. This has the footprint of a SPAC that came out of a coma, but that is holding so well. So Berkshire has been in trouble here. And look at this. Look at it. Railroad track declining. I know I think had a loss, but also there's a lot of talk about Buffett leaving and so forth. But I think it had a positive Barron's article actually. Um, I lost. I just had an alarm go off. I had three retails here that I'm watching. So look at Rost alarm. That's a buy setup after a deep retracement. These are not earnings. I'm just backtracking now. Look at Urban. Would have been a beautiful put spread, but the spreads are asinine. And so look at XRT. Crack the uptrend, but it's on a wide sideways trend. But bottoming tail and support, and that's what made me scan the whole sector. Burl here, buy setup, but it's following a Climo. But this is fluid retracement from a V top. So that looks like it can bounce too. Again, not earnings, but look at this PCG potential bottoming pattern daily, weekly. I like the new low reversal here. New low and snaps right back with a void right here. So I'm going to set an alarm at 1425 for now. I'm actually shocked. So this gap up today, like why? I was hoping, Alex and I were talking about it on Friday. I was hoping for a gap to the 50 MA. Get an ugly open here, and then maybe sell off for another 30 to 60 minutes. Because the quicker the better to get these rubber bands. Well, look at the volume on Friday. That's some big, that's big ugly volume. All right, so we're chilling here. Tro alarm, another buy setup. Tro bottoming tail. Um, I don't unfortunately have a huge watch list today. WGS alarm. It's a bull flag. Well, that's not true. I take that back. It's not a bull flag. It's a bullish consolidation within a 1E is what it is. But I got bullish weekly monthly too. I think I gave this as a actually as a put spread. Let me check. PCG alarm. Again, we already looked at it. That ain't bad. 5-minute high. Maybe do a third lot. 15-minute high, a third. 30-minute high, a third. Just scale into it. wow, this deer from Friday. I actually had a put spread on that I got, that, got clocked on it on Friday. And I just had it on my screen still. Look at that. That is an ugly, ugly breakout failure. So on Thursday, I had sold a put spread and didn't work. GPC, that's too sloppy. Oh, let me look at the trade. WGS. Yeah, we had a put spread. WGS, a 90. Ah, shoot, that's a typo. I said 95.62. It's 95.92. Say we need Don to come back. Don always corrects me and stuff like this. HEI. Breakout candidate. This would be a 30-minute high trade. Friday's tail, that's a perfect example of, our MT Live, the power of the tail. That FRPT bottom right, coming in hard. WGS 95, 92. It's spreading 35 by $1. Shoot. Midpoint right now is 30 cents, and I wanted 55, so that's not going to get filled. GC. Yeah, I like it. I like it. Let's gold. I like it, Thomas. You can buy it right here. Stop Friday's low. It's not showing earnings. Let me look. Earnings 11.4. You're good there. I like it. That's GDX. GDX looks good. Yeah. Let's do it. Buy half lot right now. Stop Friday's low. Yeah, good showing. And I'll check calls and puts also. So the first official trade was not even on our list. That's all right. PCG is ripping that I mentioned. Little California utility. Well, yeah, AEM. Yeah, yeah. I said the prior high. I like the other one better. Let me check calls and puts. OGC. Yeah, FT, my XLU alarm went off also. We're long that in our weekend letter. All right, 16s I would do 6 by 11 cents. So 1650s are 15 by 47. I'm gonna fill an offer out at 40 cents. Yeah, our XLU looks great. Set a new alarm. $16. Dollar Tree. It's just too extended for me, Alex. Look at that weekly. I'm not getting aggressive on this, bullish gap here today for swings. So this is the one I mentioned twice, and I put it in Telegram yesterday. This little PCG is moving. It's just, it's just the markets. It's what would keep me out of Dollar Tree. I like that HEI better though. Yeah, HEI I like better than Dollar Tree, but now it's moving. And it's good. I love Friday bottoming tail bar. And this weekly, see, let's compare this weekly to Dollar Tree. I like this one better because it's rested for 2 months and you got this ugly red bar ignored. And I got like three examples of downside shakeouts. See if there's still on this. I do the 320s. There's no weeklies and they're too spready. So I'm done with that. This is one of the slowest mornings, Monday mornings for me in a long time. Usually I am slammed because why? Or I mean, why is it slow? Because we have little inventory in the little watch list is why. Yeah, I didn't get to that. Yeah, Joby. Yeah, I didn't get to my whole list yet. Let me do that now, actually. That's rare when both companies go up. So that's telling me that shareholders like that decision. Spot, this is not earnings, but they said they were going to raise their prices. Boeing, they're talking about more strikes. But over Friday's high means, they're not caring much about this strike. Yeah, here's Blade right here. Open, they got a open guy though. That's a turn. If you like these little, it's a meme stock now. But this is the place to enter. They got a letter from NASDAQ saying, no, forget about it, forget about it. Yeah, I just saw that. Yep. They got a letter from NASDAQ saying, they were okay on the price, not gonna delist them. Pulte needs to go sideways more to me at this resistance. But and let it build kind of a inverse head and shoulder. Well, nice. Patrick, KGC, it's moving. moving. I was trying to sell puts. I did not get filled, but good job. The coin got a downgrade, and that's, when things like this, even though it's a big gap in the middle of no man's land with a void, if they don't close with a big bullish bar on Friday, those often go lower. VIX new low. Coin, nothing. Tesla. Uh, I read that they approved Musk getting 93 million shares that I guess were restricted, and now they're allowing them to cash in on them. And I always shake my head at news a little bit. So why would that make it gap up $6? That they're giving him 93 million shares. I don't know. Yeah, I mean, that explains it. Because he was going to leave otherwise. And that's a call spread idea. That's on support, but call spread over Friday's high if there's any juice. Cool. That's a ugly collapse, but no pattern. That's an igniting gap, but too big. Alaska Airlines, big piece of garbage. TSM, no pattern. Yeah, I've been reading about that too. They're paying some of these AI engineers like freaking $100 million. It's like money like doesn't mean anything anymore. That's just staggering numbers. Whoa, Berkshire. That's an igniting gap down here. But in a downtrend, poor Berkshire is not having a good couple of months. All right, so I have a 0 on the earnings front. Let's see, that one I said was a potential igniting gap. I had it here in the bottom right. And even if it does turn into a bottoming tail, I don't like those patterns. They need to stay strong, in my experience. That's a big piece of garbage. CNA, broker, poor thing. This would have been a good buy setup down here. This is one of Greg's patterns that went down and up and 4 bars. So that's a 4-bar turn with a void. But too late now, of course. There's the PCG I mentioned, XLV. That's down a lot, fluid, obviously cracked the uptrend. 100% from here to here is weak, but counter trend trades, you might scan the sector and find some to trade. Trent, do you mean the stock, NDAQ? It's better if you give me the symbol. Ross, nothing, Urban. That one I said would have been a. Yeah, I didn't know if you were saying something else, Trent. All right, so here's retail. That's why I scanned. Still has room. Did you all see marijuana last week? Look at it, Greg. I didn't know until I saw your video that friggin' I had to go look to see if this was a bad tick. When you showed it on your video, I'm like, can't be real. So I missed that move on Friday. I probably would have had to sell some.
Take a look at DoorDash. Maybe you could put spread there, but that came right back on Friday. It looks like it can continue to go higher.
Yeah. Yeah, it's kind of same but different of compared to this HEI I've been talking about. Bottoming tail, breakout on daily, weekly. And oh, well, this says 8.6. Let me check. TC 8.6. Yeah, I actually looked at that, Greg, and that's what kept me out. Earnings are 8.6 after the bill.
There was a lot of good patterns that earnings are this week.
Look at this. Man, it's such a luxury when you have easy management like this. Or just in trail mode. Wow, remember this Fig recent IPO? This thing is getting whipped all over the place. And I think the IPO price was like $33. And look at that, it went to 145 already. See? Yeah, yeah, it's wider and whippier than Dash and HEI. But yeah, it's a breakout daily weekly. Barrick Mining, sure. Yeah, so gold stock. So that's three now. Three gold stocks that we mentioned. That KGC was a no-brainer. So that was good. This I would sell 21 puts. 5 cents only. I don't think so, homie. Look at it, the 5-minute charts here. Impressive. Q spiders, they're just moving up in lockstep here. Impressive. I know, you know, I'm not gonna even look at these here, not now after this rally, but put spread ideas, 0 to TE, RSP. Oh, oh, neat. Well, that nasty. You call this? Is that Sam typing under your name, Alex? Sam, don't be doing that. This is not an Alex trade, I know. 100% retracement, 180 major resistance, nasty reversal. That's Sam talking under your name. So I'll let that slide. Ah,